U.S. Treasury Secretary Bessent said that he's going to buy the long-term bonds. And the thing is, see what is happening. Why is he buying the bonds? The thing is that the national deficit is increasing. U.S. needs more money to finance the government, and due to the war, the expenses have increased as well, and the earnings are less, the spendings are more. What happens then? A country needs to borrow more money, which means they need to issue more bond in the future. And if they need to issue more bonds in the future, they have to pay the interest on those bonds to the investors or the buyers of those bonds, which is me or you or the investors and hedge funds managers and the like. It's ideal for any government if the bond prices are, if the interest rates are low. That's why President Trump has also been pushing for the lower interest rate so that the US can pay off its debt a little bit easier, a bit more easily. I can't see, I don't see it getting paid off more than the speed with which they are borrowing. But the thing is, interest rates would help if they are lowered somehow. But the economy is doing so well, which means that the demands of these goods and services has been increased, which is causing inflation. And under such circumstances, it is impossible. It doesn't work that way. It's not my choice or President Trump's choice or Fed's choice. It's not anybody's choice that the interest rates have to be increased to control the inflation. It is how it is. This is how it works. This is how the things just become like. So it's not somebody's choice to. Nobody has a choice to. Apparently there's a choice that the Fed can lower the interest rate. Well, why the hell would they lower the interest rates if the inflation is increasing and the cost of living is increasing? Nobody has the money to pay for anything now. The point is, because the bond prices were falling. Why they were falling? Because people were selling the bonds because they were insecure about the US economy and what's going to happen in the future, so much deficit. And the Treasury Secretary and the Treasury Department basically started buying bonds, increased the demands of the bond, which means that the prices increased again, which means the yields fell down. Yields fell down doesn't mean that it saves the US any money while paying the interest on the pre-existing bonds. They have to still pay the same coupon. But for the future purpose, and for the future borrowing, it would lower down the cost for just some basis points. They should earn more money and save money. What I mean by save money, they should just reduce the spending, okay? Quit these wars, okay? Try to find out a good plan, a sustainable plan to pay off the debt, okay? And honestly speaking, if we have such an expensive taste, like I want a car too, I want a house too, and I want everything, I want a new phone, and if I would demand so many things in my life, the people of the United States or any country or Germany, like I'm living in Germany, the new generation, they want everything. They want everything. They want to buy everything, If you want to go on this crazy shopping, like mania, and you want to buy everything, it means the demands of all the demands of these goods and services will be increasing in the future. If the demand increases, every seller, every company, every manufacturer, every service provider, be it Netflix or be it Microsoft or be it a burger seller or any food or grocery shopping or supermarkets, everyone is going to increase the prices because every corporate, every business wants to make more money. If you're lining up outside of their stores, that give me some, I want some too, I want more. If you're really that really addicted to shopping and addicted to spending, new clothes, new phone, new car, new house, new everything, you want new everything, then the demand will keep going up and the inflation will keep going up. Things will keep getting expensive, more expensive. The incomes are almost the same. I mean, in Germany, there are not even any jobs, not many jobs left. People are being fired. What I see, that maybe a recession is on the horizon. Recession is coming, because if there are no jobs, people can't spend. People can't spend. The businesses don't earn that much. Only the very wealthy 5% is still spending like crazy, which is why the economy is growing. The lower class and the middle class, they're on the edge. Like they just don't want to spend anymore. I mean, they want to spend. Everybody wants to spend, but they can't spend anymore. That is the problem. And if you ask at such time to lower down the interest rates, how? Should we lower down the interest rate so that people start taking more loans, companies, and everybody hires again, and everybody gets more money from the salaries. They demand more products and services, and more demand sends the prices more up. So the inflation goes further up. This is not how it works. The interest rates will be kept high, because the inflation is there. The oil prices are high due to the war. Just don't know where it is going. I mean, everybody knows where it is going. It's going to not end well if this keeps going on like that. We need to really put a brake, put our foot on the brake when it comes to spending. We're spending like crazy, especially this AI spending and everything spending. I don't know how they are going to make that much money back. I mean, some when, yeah, but the treasury bond, coming back to the topic, that treasury bonds, treasury is buying bonds. It's a short term relief. It is all over the news. The bonds prices just went up a little bit. Yields fell a little bit for some time, and after that short while, it went back to the previous situation. It went back where they were before the announcement by the Treasury. So these short-term moves and these, like I would say, like not these measures are not significant to reduce the national debt, to pay off the national debt, to reduce the spend. If you really want to reduce the national debt and the trade deficit, tariffs. President Trump is putting tariffs all over tariffs, because he thinks that he's going to earn so much more money from tariffs, which is going to help pay off national debt and strengthen dollar. And just think about it. What percentage of the national debt, or the budget, let's say, would be supported by tariffs? 5% maybe? The real savings, right now they're like $100 billion, $200 billion tariffs, and a lot of that was already paid back. So it doesn't even make, 1%. $100 billion is like 1% of $1 trillion, and the budget is like $6, $7, $8 trillion. So it's 0.1%. If the tariffs got legalized by the Supreme Court and the Justice Department and everybody, they're still like fighting court cases and this and that. They have disagreement. The point I'm trying to make is that the tariffs account for 0.1% of the budget. If he's putting 10 times more tariffs than he is at the moment, he will reach 1% of the GDP. Putting tariffs will not contribute anything significant into paying off the national debt. The spending needs to be reduced. The GDP needs to be increased. There are more products and services which needs to be produced and sold. But how many products and services can you produce and sell? Because people don't have unlimited money. We don't have unlimited money. Okay, we just only have so much. We can't just go crazy and buying stuff. So this is the situation. The move by the Treasury, I think the intention was good behind it, but its effectiveness is like approaching to zero, basically, in my humble opinion. The move was very short-term intended. I mean, very short-sighted. It would not. I don't know. I don't understand why even. Why even? What's the point? What was the point? That okay. People panicked and started buying gold and bitcoins back. Did you see what happened to the market the other day? So this is what's happening inside the markets. This was some updates from my side. Nobody's watching my videos anyway. I'm just talking to myself. It's all right. Who cares? Yes. All right. God bless you guys. See you later in the next one.